Hello, I'm Scott Kaintz, the CEO of Corcel PLC, and I'll walk you through our corporate presentation. We'll talk about our battery metals exploration business and flexible grid solutions side of the house. We're listed on AIM, and our ticker is CRCL. This is a disclaimer. This will be obviously available on the website, so please feel free to check this out later. We'll go right into it. Corcel is aligned to take advantage of the decarbonization of the global economy and the associated energy transition. These trends manifest themselves in two ways. The first is a move to renewable power production. We're seeing that across the world, as well as the elimination of fossil fuel consumption across the economy. Renewable power brings new challenges to energy grids. For one thing, they don't work quite like baseload. They're not as large scale, they're not as reliable or consistent. And we see that with solar, obviously with wind. The wind blows sometimes it doesn't. So this brings a need for grid balancing, standby power, flexible generation, and of course, storage. And really, at the end of the day, what it brings is volatility to the system and the need for smoothing. On the other hand, fossil fuel reduction means cars, trains, and eventually things like planes and ships even will move to being electric. And we're seeing that obviously on a limited basis already. These changes bring infrastructure replacement, in some cases, massive needs for new infrastructure in different economies, as well as a large changeover of a large percent of the world's vehicles having to be swapped out. All of this means that the rise of the lowly battery, something that frankly, we used to all use in our flashlights when we were camping, combined with new chemistries, is changing the world, and it's putting batteries in massive demand. And Corcel is positioned to take advantage of these changes. We want to sit there at the intersection between the battery metals in the ground, so the raw materials that will go and actually go into the batteries that we all will eventually be using on a mass scale, and some of the most important end use cases of these batteries in the UK energy grid. So Corcel, as it sits today, is an optimized vehicle. It has a solid balance sheet and is ready to move. We have a new experienced management team in place, largely put in place over the last year, with a lot of experience in small cap restructuring, strategy, funding, and of course growth. And we have a strong financial platform at this point. Our view is that our strategy, which is, we think, a unique proposition to combine and to control multiple battery metal deposits currently before the upside is realized in the greater market, and to combine these with the reliable cash flows emanating from our energy projects is both unique and makes a lot of sense. We think battery metals are going to move. Some have had some boom blitz already, but we want to get in early and have control of these deposits before they go up. On the flexible energy production and storage side, this is going to happen. We know the UK energy grid is already in transition, that battery sites and flexible generation sites are under construction, and we want to be a large part of that. Our strategy also involves access to capital, both through the capital markets and through bringing in cornerstone investors, often at the project level, when things make sense to do that. We feel we have exciting news flow lined up. Multiple catalysts in the near term. Some of that is we'll cover here later in the presentation, but they include the vanadium exploration that just wrapped up, our Burwell project up in Cambridge, several interests in the PNG area and nickel and cobalt, and obviously the potential for strategic acquisitions along the way. So you can see here at the bottom of the screen how we sort of divide the business, the battery metals on the left side and the flexible grid solutions on the right side. And we'll go ahead and walk through those in more detail here. Here's the team, first of all. As I said, it's a deep team. It's been put in place really over the last year, and I can assure you it's highly motivated to grow the business. I think we have a solid track record behind us, and we're really looking forward to seeing the results of some of the work we've been doing over the last year. So battery metals first, we'll cover our interests. We really give exposure to investors to three major types of commodities, and I have them listed here. Nickel being the first. Nickel obviously is the key to battery density, and what that means is that when you buy a new Tesla, each newer Tesla year after year tends to use more nickel, for example, which gives the vehicle longer range. This works also in our phones and things like that. As nickel content goes up, energy storage values go up, and the need to recharge goes down. Cobalt obviously is the key to battery stability. Cobalt is not found in many places around the world, and in our case is a co-product of our nickel interests in PNG. So as we look to put those into production, we would expect to produce both nickel and cobalt. Cobalt levels, there's been a mass move, I would say, to reduce the amount of cobalt in batteries because it is a bit difficult to get a hold of, and a lot of it comes from the DRC, which brings with it its own complexities. But in our case, we potentially produce these assets in a reasonable jurisdiction like Papua New Guinea, and they come together. Lastly, we have vanadium. Vanadium is a battery metal in and of itself. It's utilized in what we call vanadium redox flow batteries. These are different types of batteries than lithium ions. They tend to be bigger. They tend to be a bit cheaper for their scale. And perhaps most interestingly, they have a large amount of use cycles before they wear out. So you can certainly imagine how they can be used in certain industrial applications. And we offer exposure to the vanadium as well. And I'll cover that here in more detail in the coming slides. So first up, let's cover our flagship project. This is the historic project of the company. We have a 41% interest in the Mabari nickel cobalt deposit in Papua New Guinea. This project alone, several years ago, backed the company to a 40 million pound valuation. So it is a big project. It is not small. It is not insignificant. The problem has been largely that nickel has been out of favor. Aside from a few bumps over the last couple of years, it's been largely difficult to progress. We changed that last year when our partners and ourselves reactivated the projects and did really the first work on the project since about 2011. That work was done early this year. And really what this work is designed to do is move this project from an exploration license to a mining lease. And what that means, of course, is that instead of renewing every 2 years, you get 20 to 25 years and you can go into production. So we could potentially bring in partners to do something with us. We could potentially sell the project if it made sense to do that, or we could start to ship ore from the project in the coming years to off-takers in China, for example. So as I said, this is a big project. Nickel is becoming a battery metal. I think it's becoming recognized as a battery metal now. We have a big JORC here, and we think the time is right to bring this project back into focus for the company. As I said, it's our historic flagship. It's been extremely important, and we think it has bright prospects. We have a second nickel interest, which I'll cover here. It's called the Burwell Project. This is an indirect interest, so we don't own this project directly. It's 100% owned by an ASX company called RMI. We bought a fairly sizable debt position in that business, 1.7 million, and we have an option to potentially acquire the rest of that debt here in the near term. The Burwell Project is also in PNG. It's a little bit smaller, but a little bit higher grade, so it comes with certain advantages to itself. And we've always thought that it's a natural entity to put together, or a natural project to put together with our Mabari asset, the one I just briefed on the last slide. What we really are aiming to do here, it's a bit of a complicated structure, obviously, with the debt, but we want to potentially put together a large regional nickel player. And I'm sure anybody listening can understand the rationale to have one team running both projects that are relatively close to each other, to give oneself, to give the enlarged group greater access to the PNG government. And I think it would be easier to operate. And of course, then you can mix and match ore from both sites. Both would be potential projects to use with DSO for direct shipping. And we think the synergies are real and meaningful. So we have an option that expires next month. And so this is one I'd say to keep an eye on, as we have been in talks with the current owner of the other portion of the debt, and we are really looking for ways to drive this forward together with our existing projects. So stay tuned, probably, for more news on that angle. Finally, we have the vanadium that I mentioned earlier. We own 50% of the Dempster Vanadium Project. This is early stage exploration. It's low cost, blue sky. It's in the Yukon, Canada, so a nice place to work. Also happens to be located next to a major highway, the Dempster Highway. The target here is vanadium in black shales. They tend to be pretty good types of deposits, easy to process, and we've seen a few competitors in the US bring deposits like this into advanced stages and into production. Basically, the way to think about it is that if things work well in the exploration, this is something that should be economic and should be something you can put into production quickly. The history here is that a nickel company was drilling for nickel in the area, actually found some vanadium. We've now taken it over, and we did the first field season of work out there really over the last month or so. It just wrapped up a couple of weeks ago. And the goal of this season is to get exploration targets for next year. So this is our inaugural effort on the project. And it's that kind of early stage work that I think we feel Corcel excels at. It balances well with some of our other projects, the nickel that I mentioned earlier, that's fairly late stage, already have JORCs in place. And I think fits in nicely to the battery metal story. We'll move on to the flexible grid solution. So this is the other half of the business. This part of the business is really all about investing in UK-based energy storage and production projects. We think this is on trend. This fits and dovetails with the UK's Net Zero 2050 initiative, which is to eliminate and reduce greenhouse gases over time. So we aim to use these projects to develop a portfolio of these projects to both fund our PLC, to fund Corcel, and of course to throw off extra cash that we can put into the sort of different risk reward profile of the mining assets that I mentioned earlier. We have multiple projects currently in the pipeline, and I'll talk about one here in particular. But you can see here at the bottom right the types of projects that we're interested in working with. Some of those are gas peaker plants, for example, and these are gas generators installed on sites and plugged into the grid. They turn on and off as needed. Flexible energy storage, for example, that's a little bit like the Burwell project we'll talk here. That's a large battery installation. Combined heat and power systems, which could be, for example, selling heat and power directly to, say, a Tesco that's located down the road from your site. And solar projects are also in the mix. So you can see the mandate here is fairly wide, but it all fits into projects that are about making the UK grid adapt to the realities of renewables. As I said at the beginning, renewables are not as consistent as base load, they're not as reliable, and you need these types of projects to fit in and make them work. So Burwell is our first project. This is a 30 megawatt project. It's a battery storage project up in the Cambridge area in the town of Burwell. It has a land lease in place, and we're currently working on the grid connection and the planning aspects of this, both of which are actually anticipated very, very, very soon. So news could be out in the relative near term on this. The idea is to get those three things in place: the lease, the grid connection, and the planning, at which point we would move to finance this. We would do that in an SPV format, so not at the Corcel level. We would do it at a level below, and we would seek to do that here towards the end of the year. On that schedule, we would look to energize the site next year, and it could be throwing off cash flows relatively early in the year at that stage. And that's really the advantage of these projects. Obviously, you can see they have very different timelines than the traditional mining projects that take quite a long time. Those are actual pictures of the substation there in the area. You can see it's located in some traditional English farmland, and so it does have actual opportunities to expand. So this is a project, we say it's 30 megawatts today, but it's one that has multiple expansion opportunities, both potentially on the solar side and on the storage side. So that's one thing that when you do the work to set up the infrastructure and the grid connection, it may well be that this is something we can build on quickly. I would also mention that we do have an offtake offer in place from LimeJump. LimeJump is a demand-side response aggregator. Their basic use here in this mix is to operate our battery, and I think we're very pleased to have that arrangement in place with a company backed by Shell, frankly. They take on the running of the site. Once it's built, you hand over the keys to them, and they trade your power. So they effectively buy power, of course, when it's cheap, and sell into the grid when it makes sense. And it allows for that smoothing that these battery sites are famous for. So bottom line is that this is a project that could throw off near-term cash flow for the company. It's relatively low risk, certainly a different sort of risk-reward profile. Our estimated returns on a project like this would be sort of 8 to 16% per annum. Which are attractive, of course, but a little different than on the mining side. And we think that we're excited about news flow on this, I think, in the very near term. So here's our news flow side. This sort of summarizes everything I've told you. It shows you what we expect to happen on the two nickel projects on the Mabari side and on our discussions with RMI on the Wowo Gap side of things, and trying to put these two into some configuration that makes sense and creates value for everybody, building something a bit bigger. You can see there the Burwell site and how it's expected to advance through getting the bits set up for calling it shovel ready, through to financial close, and ultimately through to construction and operation. And then also finally on bringing in cornerstone investors, as I said earlier, that's something that is critical to our business. And when the time is right, we will bring them in, possibly at the asset level. As I said, possibly into some of these storage projects, for example, might be a good time to do that. So these things are lined up, and you can see as a company we have a lot going on at the moment, and a lot to report. So on that basis, let me just leave you with three main points. I think we believe Corcel is on trend with the major transformations underway in the global economy. That's the decarbonization efforts I talked about earlier, and this related move away from fossil fuels. This leads to the rise of batteries, their importance in our daily lives, and we're all starting to see that, I think, now, and the flexible energy solutions that are required to make our UK energy grid, for example, work as it needs to smooth out the rise of renewables. So we think we're in the right place there at the right time. We think we offer a unique investment proposition. I'm not sure there are any other entities offering access to both battery metals and to some of these end use cases. I mean, of course, there are some doing one or the other, but we think the combination is truly unique and very compelling, and that we are, a unique investment proposition on AIM. And lastly, I would just say that I think we are an undervalued entity. I mean, even really with our current asset base and our current prospects, we think we're ready to move. And frankly, we look forward to announcing further progress on these different projects here in the coming weeks. I think that's all I have. I'm happy to move to questions at that point.
Get stuck in straight away then. Corcel has the option to buy additional RMI debt. Have RMI been receptive to synergizing the Burwell Gap nickel project with your own in Mabari? What's the relationship like there?
Well, we are dealing primarily with Sinom, so the owner of the other half of the debt at this point. Moving on and dealing with the company itself, I mean, I would point out that Sinom is the majority investor in the company. So to some extent, when you're talking to the Chinese group that owns this debt, you are talking to the company. And so our view is that the angle is really to make sure that we're doing the right thing with Sinom. I mean, he's actually a keystone investor in Corcel at this point. They came in as part of the original transaction, and they would be a bigger shareholder as part of this one. So we've spent most of our efforts not with dealing with the management team of RMI, who's really focused more on the day-to-day of the project, on their own exploration license and their own development, but on this sort of bigger picture of the synergies of having a keystone Chinese investor involved, and making sure that as we look to do something with this option, that the whole is greater than the sum of the parts, basically. I mean, that each part, that running the two projects independently obviously carries with it the larger management team. You duplicate staff, so you potentially fold that into something, and we're working on defining exactly what that is. Something that is larger and more substantial, that has advantages, as I said, in the region and potentially in moving forward to production.
And so just to clarify, what percentage of that debt do you currently already own?
So we're about 50% of the outstanding debt of the company.
And so the option is to take the remaining.
We have an option over the other 50%. That's right. So at that point, you would effectively own all of the realistic debt of the business. And one could then, again, you're talking to the same party in two different forms, one as shareholder, one as debt holder. So what I'm saying is we're focused on the sort of bigger picture aspect of the debt, but it's really to some extent having the same conversation with the large equity, investors in the company itself.
Understood. Next question. There seems to be a significant valuation disconnect between peer group, recently exposed by broker coverage concerning nickel projects. Mm-hmm. The note compared Corcel to Horizonte Minerals. Horizonte has a market valuation of 110 million, whereas Corcel has a valuation of only 2.5. How does the board propose to close this valuation anomaly?
Well, to some extent, it's doing things like this. I think it's about banging the drum. I mean, obviously, Corcel has just gone through a rebranding effort, and I agree with you. I think we all agree with you. I think there are substantial. The traditional project backed us, as I said earlier, to a 40 million pound valuation just a few years ago, and without doing anything in the company, I think just bringing that into realization, showing people and reminding people of how important nickel is becoming to the battery story, hopefully will start to get us there. I also think the transactional aspect of what we just talked about doing something more corporate, where we potentially put our asset together with something even bigger, I think that should also just drive home this point that what's there now is probably undervalued, frankly. And if it's put together as we intend to do with something similar, but of also substantial size, then you're talking about really being an international nickel player that can't be denied. And at our current value, that I would agree, of course. I mean, most CEOs would say this, but I think our current value just doesn't reflect any of the potential of what we're trying to do at the moment. And I think a lot of that is just getting the message out. We've had an interesting year that completed in this rebranding a few weeks ago, and so our task at the moment is to tell the story. I think people will, once they see the facts, start to look at things a little bit differently.
You talked through Burwell, and he's explained you financed that through an SPV. Could you give an idea of what the costs of that would be?
Yeah, so that'll be a debt and equity funded project. We're working on the sort of bottom line there, but a good number to be used at the moment would be about 30 million pounds, something like that. So you'd be looking at, you might call it half debt, half equity. Might be a typical way to do that.
We've had a question in, how's the Southport Peaker gas project going?
Well, that's an interesting one. So that's one that we've looked at really for a long time, for about 18 months now, and we've been interested mostly in doing the gas and the battery aspects of that project. And this last week, another AIM company has just signed an MOU with some of the guys we were talking to about doing more of the biogas angle of what they're doing. So funny enough, I've actually got a meeting set up with this other group next week. So we remain interested in it. I mean, it's not our primary focus, but we believe that there could be an angle for us to be involved in what looks to now be potentially a larger project. I mean, we don't have specific biogas type expertise, and there has always been an angle of that project that had a biogas element to it. That's one that we were a little bit less comfortable with. I think our view has always been to focus on the batteries and the gas generation. And so it looks like the conversations are ongoing there. So hopefully we'll have more to report.
And on the battery market, have you identified, are there many more sites? Is this something that can be tapped into many times over, keep, repeat, or can you talk to the potential for that in the UK?
Yeah, no, there are many sites. Again, the key is to get them to what we call shovel ready, to get the different bits lined up. It's easy to identify that a site might go there, but when you dig into the complexities of attaching it to the grid, when you apply for a grid connection, sometimes you have certain constraints around how it works. For example, it's a little bit like an internet connection. They may say, well, you can have a certain upload speed and a certain download speed, and we reserve the right to cut that or change that. So it's not so simple just to say there's a site. You really do need to dig into the detail and the economics of how it would work. But broadly speaking, yes, these are going to be more and more of these around the country, and many do exist. Another option, of course, is to buy some existing ones. Many of these types of sites were funded by people using EIS funds and things like that, different tax advantages and other things, and may now want to, may want to exit when the time is right. So I think there's an angle there to both develop internally, which is really what we're trying to do at WDD. It's a little bit like the mining side where you're trying to capture that initial uplift, but also to potentially look at portfolios of things or projects that are exist. For example, we've seen some projects propose that propose to take an existing diesel generator, for example, and to convert it to gas, because diesel is a bit of a tougher sell, obviously, in today's market. We talked about at the beginning of the presentation the move away from fossil fuels. So you've got a site. Maybe the site has a grid connection already, it has some infrastructure, but it needs to be, you might look at it as kind of modernizing it. That's another type of opportunity, and those are the kinds of things we see as we're out there, and that could play a role. And that's partly encompassed by that project pipeline that I mentioned earlier.
I think we saw over the summer, back when the sun was shining, the consecutive days where renewable energies were used in the UK, and it ended up being quite some figure. But now the weather's changed, the nights are drawing in. Let's see.
Yeah, that's exactly right. I mean, I always say it myself. My own personal power company in my flat has offered at times for me to use electricity and be paid for it. And if that isn't exactly, I mean, that's the model exactly there. I mean, there are times where the grid is overloaded. For example, if demand is down because of COVID, or because the wind is blowing too much and there's too much production, you can be paid to take electricity. And funny enough, you can actually do that at the consumer level at this point, let alone at the industrial level. But I think it just illustrates the nature of the opportunity. When you had a coal plant or nuclear dominating, say in France or the US, you just don't have those problems. You don't have power that you need to do something with. But as we move to renewables, that's more of an issue, and that's where this flexibility, the ability to store at a time of high production and feed back in at a period of high demand, it makes total sense, and we can kind of start to understand it as an individual and again on the industrial side.